Traders, Cousin Vinny coming to you from theclosingprint.com, February 27th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which bounced in a major way on Thursday, followed through on Friday, with most of big cap growth bouncing on Thursday and many closing in the upper half of their daily range on Friday, leaving us with 15 bullish indicators for the week. 3 are neutral and 2 are bearish. The sector heat maps improving for both the S&P 500 sectors and international markets. And we have a slew of stocks this week that are set up trading at highs, albeit bullish setups going into the first week of March trading. S&P 500 supports at 4,300, 430 SPY, Qs 340, with resistance at 4,400 and 4,450 for the S&P, 440, 445 for the S&P spiders, and the Qs at 360. We are still trading in a negative gamma environment, so we'd like to see institutions buying further out in time as well as higher in price, along with some rolling up of put support as we trade into one of the seasonally strongest periods of the year between March and April. Bottom line, we do have geopolitical risk, so we'll start the trading week with a bit of caution and then move forward accordingly. Starting off the week, we have the equal weight index on a buy signal. Confirmation on Friday as the number of stocks trading above their 50-day has started to improve. CCI also triggered. In the past, these vertical lines indicate where price action has given us a buy signal, telling us where previous buy signals have come into play and what we can anticipate going forward, coupled with the other 14 bullish indicators that we have for this week. The Arca Institutional Index, the 75 stocks that institutions have typically in their core portfolios, is neutral to bullish with a bounce and a W-shaped pattern forming. We're looking for follow-through this week, barring any geopolitical tensions that may cause some pause in institutional activity. Most indications are that we'll at least head back up to the 200 period moving average just overhead. In addition, we also see the S&P 1500 composite, S&P 500, S&P 400 mid caps, S&P 600 small caps, neutral to bullish. We're starting to see the histogram go green and the signal line turning back up. So this is another neutral indicator in addition to the previous Arca Institutional Index XII chart that may turn more bullish this week. As the U.S. indices attempt to bounce, we're also looking for growth stocks, many of them trading at a discount to present value, like Facebook. We'll look for those stocks to move higher. We're also watching for the Qs and the NASDAQ 100 to bounce and follow through after this hammer appeared last week. On this weekly time frame, we'd like to see price action get back above the longer-term moving averages and for volume to stay at the same level or higher this week, looking for oscillators to turn up to confirm that this bullish bounce has a bit of stamina going into the seasonally stronger months of the year, March and April. The same thoughts go for the Russell 2000. If we can manage a follow-through and a push back above the 10 EMA, the orange colored line, that would indicate that small caps are leading once again, looking for a retest of that 243.72 level overhead, most likely occurring if institutions find value in small cap energy, small cap financials, small cap consumer discretionary, all of which performed quite well last week. The 9 small cap sectors indicate a potential for follow-through as most of them move back above their 21 period moving average, attempting a move back above the 50-period moving average, the red line, indicating a potential follow-through this week. So if you're trading small caps this week, make sure that these 9 sectors are confirming, while we'll do the same during the live broadcast. If you're bullish, you also want to see breadth improving this week. The S&P 500 in the middle panel, mid caps in the lower panel, small caps and NASDAQ in the lower panel, all moving back above zero with potential to follow through, well off of exhaustion levels above plus 30%, as you can see. With all 4 of these at the zero line, we need to see breadth improving this week if we're going to be positioning for bullish trades going into the first trading week of March. We can also surmise that if we see the number of stocks trading above their 50-day improving, along with those breadth thrust indicators in the previous chart improving, together with the McClellan oscillator for the NASDAQ and the New York Stock Exchange, we should see a follow-through. So I'm looking at the black line here. We built a trough 3 weeks ago, 4 weeks ago, looking for a follow-through. That continues to improve for both the NASDAQ and the New York Stock Exchange. As the latter continues to build on this trough, looking for the next peak, well off of overbought levels or exhaustion levels, as institutions continue to buy the dip. Finally, we'd expect to see any improvement in breadth and price action to be coupled with a reduction in the amount of volatility. We have a green signal on VIX that's telling us to look for higher highs and higher lows on this 60-minute time frame, together with a reduction in the speed of the volatility of these moves. As you can see, VIX, the VIX of the VIX, continues to drop off. Whenever we see these peaks and troughs, we time our highs and lows accordingly. So as this continues to drop off, we're looking for VIX to move lower. And for the current backwardation, where VIX front month is being bought heavily for protection versus the 3-month, as we start to move back down towards the red zone where VIX moves into contango, a normal state where the 3-month is more expensive than the front month, these reversals tend to confirm reversals in price action, looking for confirmation as this drops and for price action to move higher for the S&P 500. Going into this first week of March, we also want to acknowledge that over the last couple of weeks, even though price action was dropping into that geopolitical risk, we did see check and money flow for all the major indices moving higher and bullish, while the unbalanced volume had yet turned. This is a development that could lead to confirmation for a bullish trade and follow-through this week. As we start the week, we also want to keep an eye on what the bond market is telling us. More than 2 times the size of the equity markets sum total, the sovereign debt and bond market many times will give us signals like they did back in February of 2020 when COVID hit. We broke a downtrend in the yield spread, as we can see here. We're starting to move a little bit higher. No alarm bells just yet. More caution as the bond markets start to price in default risk. We've moved up to about 375 to 390. Any break in this trend or higher highs, as we pointed out last week, would indicate that the bond markets feel there is more risk that needs to be priced in. So something very important to watch this week. It's only one indicator that's bearish this week out of 2, while the bond stock ratio still remains bullish for equities. As this drops, we're starting to look for more confirmation on a resumption of the buying we saw last week. We need to see this ratio drop off between the S&P 500 and the 10-year bond. If that does happen, we're looking for the S&P 500 to continue this bounce that started on Thursday. We're also watching currencies. As you can see with the US dollar here, it's pretty much in a sideways range, but no indication of safety per se. When the markets consider that there is a risk out there that needs to be hedged, a lot of times you'll see safety trades in commodities like gold and silver, as well as the US dollar, safe haven. While we look for continued strength in gold, if gold does pull back in, that would be an indication that the safety trade is out of play for now. At the same time, we watch for commodities to continue their current path or to consolidate recent gains. It's been up 23 months in a row. Looking for some signals here. Commodities, another safety trade as we continue to see relative strength in metals and mining stocks. Steel stocks were on the move last week. We'd look for a follow through there as well. Freeport McMoran, Rio Tinto, and other mining stocks looking for continuation, as many of them, like Rio, bounced on Thursday into Friday, while Freeport McMoran broke out to 52-week highs. We'll look for that to continue this week as well. As the weekly chart shows this big cup with a potential for a follow through, momentum has turned. We can see that rate of change is becoming more and more bullish. Finally, we'd like to see Brent Crude Oil come back a bit. It's well above its 10-period moving average. For the last 8 to 9 weeks, we've seen this bullish strength persist. While this does have a positive correlation to equity markets, it is a bit stretched at this point. We also know that it's fueling inflation, so we'd like to see Brent crude back off and come back towards the 10 EMA this week. The sector heat map has improved markedly over the last few weeks, mostly chartreuse and dark greens, lime greens, with very few indications of weakness except for potentially the oil equipment exploration production group, which have backed off a bit. The rest of the sectors look very strong. We also see improvement in international ETFs, mostly light orange or lime green and yellows. So that improvement is reflected in the international ETFs, which have all been ranked by performance. Obviously, Russia's doing the worst, but South American countries, Greece is doing well, Turkey's doing well, improving, along with the United Kingdom, Mexico, Spain, India, Italy, France, and so on. We're also looking for the S&P 500 small cap sectors, as we previously mentioned, improve this week, along with the major spider S&P 500 sectors pushing higher. We can see improvement since Thursday and Friday, bouncing off of support levels, with most of the S&P 500 sectors looking very strong going into this trading week. The IBD 50 showed relative strength last week as well. Most stocks on these 5-minute charts closed above their VWAP, as the short time frames and the daily, weekly charts all look very bullish, looking for a follow through, with strength in the steel stocks noted on Thursday and Friday, looking for a continuation in stocks like Cleveland Cliff, which had well above average volume on Thursday and Friday. Institutions bought that dip, looking for a consolidation along the 200-period moving average now, with MACD above its signal line, stochastics turning, volume increasing, and RSI above 50. This could very well blast right through this area without a flag or consolidation. So we'll be looking for that on Monday as the whole group moves together, like commercial metals, CMC, Nucor Steel moving higher, Arcelor Metal, German Steel, Masabi Trust following through, Reliance Steel breaking out, Ryerson Steel pushing off the 21-day. That's a nice little area right there on Ryerson, RYI. We'll also see Schnitzer breaking higher. This is a nice looking setup as well, going through the 50-day on Friday. Timken Steel breaking higher. We had Steel Dynamics breaking out to 52-week highs. Vale also pushed higher. Zeus Steel, US Steel, and Worthington Steel all showing very bullish price action. With the whole group moving together, we'd look for this to continue on Monday. Many of them maritime and shipping stocks also followed through last week. Fertilizer stocks like CF Industries, Nutrient, and Mosaic also continued higher. Look for that to follow through this week. Fertilizer and agriculture related names. MP and other materials, metals, and mining stock looking for a follow through. Marriott, hotels, travel and leisure stocks also showing strength. Marriott bouncing off the 50-day moving average. Nice follow through Thursday, Friday on above average volume. Stochastics beginning to turn. RSI still above 50, turning higher as well. Look for the travel and leisure stocks to continue this week with Global Ship Lease, Matson, Star Bulk Carriers, and several others looking very strong. While Zem Integrated bounced near the 50-day moving average, we're looking for that to continue along with all of the shippers this week. 10-year bouncing last week as well. We're looking for the financials to continue. We see Raymond James pushing back above the 50 and the 21-day last week, along with Signature Bank Corp and many of the other banks discounted to value areas. We're looking for stocks like Goldman Sachs, Bank of America, and Wells Fargo, one of my favorites, to continue with this buying. We're back above the 50-day. Wells Fargo is one of the few banks that are back above their 50-day moving average already. Looking for volume to pick up and start to look more like we had over here in the beginning of January, where we had that nice ramp in price action. Looking for all these green bars to start showing up as price action moves back above the 921. Last week, the 50-day, going into some of the seasonally strongest months of the year. Many of the technology stocks also looking good. Trade Desk following through. Nice push back above the 921 and 50-day. Looking for a follow through this week, along with growth stocks like Facebook, which are trading at a discount to future cash flow and earnings, along with Microsoft, where we're seeing a nice triple bottom along this level. Look for a move back above the 21-day on Monday. If we do, then attack the 50-day most likely. We're also looking for many of these stocks to follow through that are from our stochastic oversold scan, like Apache, looking for a follow through. Amgen, looking very strong. Many of the banks and regionals looking good, like Citizens Financial back above the 50-day. Comerica pushing higher. Retail stocks like Costco gaining some relative strength, looking for follow through here as well. As price action closed back above the 21-day, looking for a retest of the 50-day. If that should occur, we're looking for this W-shaped pattern to follow through and retest 52-week highs. RSI is back above 50, volume increasing, showing institutions have been picking up shares, and MACD is back above its signal line with stochastics rising. Additional retail stocks, while maybe not many people's favorite, Macy's is basing. We can see this horizontal range. If it breaks out to the upside, the only way that's going to happen is if institutions are buying and investors continue to pick up shares. If it breaks down below the 200-day, then you would have your signal for a bearish trade. My guess is that Macy's is going to move higher over the coming weeks, as Macy's trades at a discount to future cash flow and earnings projections. Many of the lumber and forestry industry group names moved higher last week. We saw Boise Cascade moving higher. Weyerhaeuser is trying to push higher as well with a bounce and a follow through back above the 921 and 50-day. Volume started to increase again. MACD is starting to turn, and stochastics has already started to move higher, with Louisiana Pacific also bouncing. Volume picking up. MACD is above its signal line. Stochastics turning. While we look for most of these stocks that are shown in the opening monologue to continue this week, barring any geopolitical risks that give us reasons to be cautious, with most of these stocks set up and ready to follow through this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on February 27th, 2022. I'll send out a watch list later tonight around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast. Be sure to check your inbox for that. Otherwise, enjoy your weekend, what's left of it, and we'll talk to you in the trading room in the morning. Take care.